This is the Friday, January 26, 2018 version of the Market Plus segment. Joining us now, Sue Martin. Hi, Sue.
Hi there, Paul.
All right, so I cut you off in meats. I'm sorry. We still had pork bellies to discuss. Really, that's all on the brain for me is the pork market right now because of pork bellies. That is really what, that was one report I read this week that said that's what's driving this market. Is that really the case, or what's going on with hogs?
Well, everybody loves bacon, I guess.
Do they really?
I guess. But, you know, the hog market has had a good run, and I think it's getting a little bit where it needs to correct back a little bit. It looks like some of the early Easter buying is over, and so the product's kind of softening. But it doesn't matter whether we're exporting beef, exporting pork, we're sending meat out the door. And so I think when I look at the hog market, we might get a little bit more of a pullback. But I'm also hearing talk that Canada has a big problem in PRRS. And so when some say, well, we were supposed to have all these hog numbers, where are they at? Maybe we're not getting as many in from Canada originally, and therefore that number still drops down a little bit. It may be that our June market's a good hog market, where the June market on cattle maybe isn't so good.
Okay, something to watch there. Another thing to watch is cotton. The old Frank Sinatra song is, and now the end is near. Are we facing that in cotton? We had a sell-off this week.
Well, I look at cotton, and I think it got over 83 cents. And to me, if as a producer, I would suggest making some cotton sales. I'm not saying it can't still push higher, but you're not an early comer in here. You'd be coming
Right.
in the latter part of this move. So I don't think that would be a bad thing. I definitely, if I was a cotton producer, I'd be making some sales, or at least putting some put strategies under this to floor that market for you. You know, economies are picking up globally, and that means more demand for cotton, which China's big producers of cotton clothes and what have you. So, you know, demand should be on the uptick, and that's a good thing. But at the end of the day, I would be marking some hedges.
All right, time to make some money. And you know what
Absolutely.
also it's time to do? Time to answer some of those Twitter questions. You can find Sue at Futures Info.
Futures Cash Info.
Futures Cash Info on Twitter. You can find us at Market to Market. Baloo found us and wants to ask you, and yes, his picture is Baloo from Disney. If NAFTA goes away and Mexico goes elsewhere for their corn, how long do you think it will take the market to work itself out? And he's saying use the example of the Holstein fat market last year after Tyson quit buying. What's your thought on NAFTA?
Well, first off, Holsteins did fall back after Tyson quit buying and the price got awfully cheap. But you know, when you get something cheap, somebody else sort of wants it.
Right.
And we're shipping Holsteins to Canada. So there's a market for Holsteins now, and I think prices will be going higher. As far as NAFTA goes, I don't see it going away. You know, I'm kind of, this is no political pitch, but I sort of feel that President Trump may be on the right track. While NAFTA was very good for us, and we don't want to, you know, we're worried, you know, uncertainty builds concern and what have you, but I also think we need to make the playing field a bit better. And the only way we can balance this trade deficit a little bit is to try to rework some of these agreements. And what do we owe Mexico, $63 billion or something like that?
Give or take a couple of
pennies.
pennies.
So, you know, we need to rework it. You know, not far from here, Maytag left and went to Mexico. Well, we need to start bringing some of these companies back and doing, or else if they want to keep them, then how about they do use some American-made parts, you know?
That's one thing, and that's what I had a friend tell me yesterday. We were discussing commodities, and he says, well, what about manufacturing? Manufacturing was a big loser. NAFTA talks just this week, what they might discuss. We're sanitary, government procurement, autos, dispute settlement, dairy, lumber. Corn and soybeans, you don't even hear anything about the discussion of NAFTA. Intellectual property, it's such a small part of that.
Yes.
It's a bigger picture in things.
Yes, but good for dairy. I mean, that's awesome if they're going to rework it for dairy.
Because Canada's been having some major issues. We're having major disputes with Canada when it comes to dairy.
You know, there's something else here when we talk about Mexico or Canada, for example, especially, and Australia, New Zealand, and some of these other countries. Well, the things that they're shipping into us now with the dollar down, that that isn't so attractive as it once was. That could also kind of slow up the push to send things south a little bit.
All right, well, let's go south down my paper here a little bit. Fran in Nebraska, and no, it's not Fran McCaffrey, but it's Fran the Man, 44. Will there be an opportunity to price corn or soybeans later in the spring?
Yes.
Higher than we are what you're thinking here in the next week?
Oh, absolutely.
Yeah.
One thing that could happen is the bean market could, okay, on beans, since 1964, we have only had 4 times in the past that we've had carryouts over 400 million bushels. And of course, we're at 470 right now. I'm not going to say it's not a concern to see Brazil with 114 million metric ton potential. You know, they've got a lot of crop yet left from this last season that is unsold, just like our farmers have a lot of corn and some beans. Okay, but the bottom line is that when we look at these markets, in years similar with high carryouts like this, I went back and looked at them, and then you also have a year of an 8, and they tend to have a pattern, and I have 100 years of data on that. So they do there's a tendency to drop down into April. A year ago's pattern, we put a low in January, rallied 80 cents, maybe 90 cents. Fell back down, came down to April for a low, rallied 50 cents, went on down into June and put a low in, actually for the year there. Then we bounced and came down into August for our final test of an 84-year cycle low. Then in January of this year, we've had 48 50-month cycles, part of derivatives of that 84 year, that we have stuck some lows in. So the market's rallied nicely. I don't see us falling apart in beans unless something happens, that Brazil comes at us and we have a trade war thing happen with China.
Well, now, you bring up a point in China. About 10 years ago, last decade, it was a 37-34 split U.S., Brazil importing to China. Right now, it's 57-31 in favor of China. They have taken our market and then some.
Well, they have, and that's going to happen as we continue to grow globally, you know, but the world is growing with such huge demand around the world. It's not just China, we've got Europe. And I think that when we look at what's going on, look at Argentina, the world's largest crusher in soy meal. And they don't export beans as aggressively. They're more of a corn competitor than they are beans. But they're having their share of issues. And biodiesel, ethanol demand, China's growing there. Brazil's growing in ethanol, and Argentina's growing in biodiesel. What about India? India is a huge country that's making big strides and changes in energy and what have you.
Energy. It's like you're looking ahead on the piece of paper. You're cheating, Sue.
Oh, am I really?
A little bit. Play Hard and Dyke asked this, but I want to throw up Minda's question at Grains Girl. And she's talking about watching for new China import corn demand. Do they have to get okay with GMO before we expect significant imports from them? But what I want to really focus on here is, though, should we be getting excited about them importing corn for ethanol? I think I read this morning ethanol is the cheapest it's ever been in China right now. Is that good for U.S. producers?
Well, if ethanol is the cheapest in China that it's ever been, that might not be good. It might be good for end users, I guess, because by 2020, they have to be 10% added. You know, E10.
Right.
And they have 11 provinces already that are there. So they are making that stride. They really are trying to make the initiative to have cleaner air. And they're going to keep working towards it. And I think they've tried this once before, but this time I think they're really serious, and I think it's going to happen. I think you're going to see a huge increase in corn demand. Right now, though, keep in mind, Ukraine's down in production. Argentina looks like they're heading south in production. Brazil looks like they're heading south in production. We're looking at less acres. And then you look at China and they got junk. So they're going to need more. So to me, if we come off with a little hint of a weather issue, I don't care if we've got big carryout.
You don't care how much the stock is or the carryout? No?
No, because I think we're going to be eating it up. We're going to use it.
Interesting. That's a good theory.
Not to mention livestock numbers are on the uptick
and we'll go back
around the
to our
world.
livestock discussion that we had on the show. Now, ethanol, we had the report on ethanol this week. We have a 1 billion stock. That's a record here domestically.
Yes.
So, I mean, we're making a lot of it. The product's out there. It can easily go out the door once it's already made.
Okay, look at crude oil. You know,
How high? Okay, yes, I have a crude oil question. How much higher are we going on crude before you get into your thought?
well, I wouldn't be surprised. I mean, we've been up around over 66. We might get up into the 70s. That would not shock me. In fact, we might even get more pushing because once we went through 62.50, there wasn't much above us up for a ways. So, but as crude oil keeps getting higher, that's certainly making the ability for the market to percolate and be kind of stoke the ethanol production.
Yeah.
Because gasoline, E85, is going to be in much better demand.
Because it'll be cheaper.
And on top of it, did you notice natural gas this past week?
Another 8%, I think, this week, yeah.
It just, that March contract jumped like no other. We're starting, if you haven't noticed, this week felt like it more than any time here recently. You'd think it was a full moon. but the markets have really started to kind of starting to awaken. The continuous commodity index broke out from a downtrend line from the 2011-12 highs. We have trend indicator moving averages that are like just on the cusp of turning positive as well and turning into an uptrend. Well, that's weighted, that index is weighted with agriculture. And you look at how this past week everything was, cattle, of course, were all over the place. They seem to be lately. But you had beans being more active. And then you had a 15-cent break in a heartbeat. Wheat was starting to push. You know, it's just like it's starting to come alive. And I've been in this business.
A couple of years.
Yeah, a few years.
2 or 3.
But there was an old saying when I first started in this industry, oats lead, or oats know, and wheat leads. And if you look at the last year, those were the two markets, that and cotton.
Yeah, and oats has been a story here recently. We could get into that, but I want to ask one final question, or maybe I'll even think of one more after that. But I'm going to ask Brett's question. This is very specific now, and it goes back to our livestock question. Brett's asking, should I continue to run yearlings on corn stalks until the end of March or get them to the sale barn now to maximize profits?
Well, if he was watching the show ahead of time, he already knows my answer. Hang on to them.
Hang on, right?
I know that he says the end of March. Boy, if you can shove them into April, that'd be great. Here's the thing. If you take February fats and push them up, now we might chatter here seasonally a little bit. Markets are behaving pretty seasonal right now, too. So if feeders do tend to get a little bit of a correction as we move into February, and then they turn on and take off again, or fats do, feeders do too. So if we can get a pretty decent close on the Feb contract, we've got the same playbook that we had a year ago. It goes something like this. Higher highs are made in April. Feeders move up in April. You break cattle down into June and probably all the way into August, and then you've got a good fall.
All right. Sounds like a good way to end. Sue Martin, thank you so very much. Always enjoy the discussion. Good to see you as well.
Thank you.
All right. That's Sue Martin, one of our regular market analysts. And thank you so much for watching this Market Plus. And I want to remind you to join us again next week when we'll check in on South Texas farmers and ranchers rebuilding after Hurricane Harvey. And Ted Seifert will sit across from me here at the Market to Market table. So until then, thanks for watching, listening, or reading. I'm Paul Yeager. Have a great week.